Welcome. In this video, will ZBCN coin be bullish again? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When the chart is examined in detail, it is evident that a clear downward trend structure has been in place for quite some time. Price movements have consistently formed lower highs and lower lows, creating this trend and over time, establishing a market structure that has dampened investor appetite for buying. Such downward trend structures are considered indicators of dominant selling pressure in the market from a technical analysis perspective. However, no downtrend lasts forever, and at certain critical levels, the market balance begins to shift. In the current situation, the downward trend line identified on the chart stands as the main structure suppressing price movement, and attempts by the price to break above this line can be observed. These types of downward trend lines serve as dynamic resistance levels from a technical standpoint. That is, each time the price touches this line, sellers tend to step in again and push the price down. However, over time, these touches become more forceful, and the price begins to attack the resistance more strongly. As the intensity and frequency of these attacks increase, it can be concluded that the trend line is weakening and approaching a breakout. This appears to be the case in the current price structure as well. With each new decline, the price is losing less strength and applying greater pressure on the descending trend line. This is an important technical signal indicating that buyers are gradually gaining control of the market while sellers are losing strength. Especially in recent candlestick closes, the fact that the price has come very close to the descending trend line and that upward movements are starting to appear in this region suggests that the market is now entering a preparation phase for a breakout. This breakout does not simply mean surpassing a line. It also signals a fundamental shift in market dynamics. Once the descending trend line is broken, buyers will have overcome the structure that had been suppressing the price, and technically, the path ahead becomes more open. If such a breakout occurs, a rapid upward movement in the market is highly likely. Exiting long-term downtrends often leads to the release of pent-up energy, which can result in sharp bullish moves. Additionally, many technical traders interpret such breakouts as the beginning of a new trend and act to enter positions after the breakout. This increase in demand, coupled with rising volume, can accelerate the price upward. Several key criteria need to be met for a successful break of the descending trend. First, the price must clearly move above the trend line, and this breakout must be supported by volume. Volume is a critical indicator for determining whether a breakout is genuine or false. Breakouts with low volume often fail, while those with high volume are more sustainable and reliable. Second, after the breakout, it is ideal for the price to return to the trend line and test it as a support level, known as a retest. A successful retest provides the technical foundation for the continuation of the uptrend. Another noteworthy element in the current downward trend structure is that the price is now becoming increasingly compressed parallel to the trend line. The confinement of price movements to a narrow range indicates that the market is searching for direction and that a major move may be imminent. In such consolidation zones, a sharp breakout to the upside or a breakdown to the downside typically occurs. However, when evaluating the technical setup, momentum indicators, and general market sentiment, the likelihood of an upward breakout appears more dominant. When this breakout occurs, not only will short-term buying opportunities arise, but it may also mark the beginning of new medium and long-term trends. Breaking above the descending trend line represents the overcoming of a psychological barrier that many investors have been watching, but we cannot base analysis solely on trends, so let's also look at other metrics. Stay tuned. On the chart, where market movements are carefully analyzed, it is clearly observed that the price has found strong support at a certain level and responded upward after touching this area. This zone is one of the areas referred to in technical analysis as a support line, where buyers step in heavily. Support levels represent areas where the price has historically paused, reversed direction, or encountered strong buying reactions. Therefore, these areas hold great significance for investors, both for short-term and long-term positions. This is precisely what is observed in the current price structure. As the price continued its downward movement, it stalled at a specific level, and as soon as it reached this level, sellers gave way to buyers, triggering a strong upward reaction. This confirms that the level has now become an active support on the chart. From a technical analysis perspective, for a level to be considered support, the price must show a strong reversal after reaching it. This reversal is not only a temporary reaction, but also a strategic turning point that gains the confidence of buyers. Such support levels also tend to retain their importance in the future. Once a support zone has worked effectively, it starts to be used as a reference point by both buyers and sellers psychologically. Buyers plan to re-enter positions if the price approaches this level again, while sellers may reduce their pressure knowing the area is strong. This increases the likelihood of another upward reaction if the support is tested again. When the price begins an upward move after bouncing from the support line, it shows that buying pressure is strengthening in the market and that investors see this level as an opportunity. This zone, where buyers concentrate, acts as an area where the price struggles to fall further, where demand builds, and where the price ultimately reverses direction. Such areas can also be referred to as liquidity pools in technical analysis, as the orders accumulated there may be strong enough to prevent the price from dropping further. Additionally, when the price visits the support level multiple times, that area becomes richer in liquidity. Scenarios known in the market as liquidity grabs occur when the price dips into the support area to collect orders before making a strong upward move. This is a technique often used by large investors to open positions at more advantageous levels. Therefore, when the price returns to this support again, buying pressure may intensify once more, increasing the likelihood of sharp upward movements. Moreover, the support area should not be seen as just a horizontal line, but also as a key structural level formed by previous price action. For example, this area could be where a strong rally previously began, or a price cluster that saw high trading volume. In such cases, the support line becomes a strong anchor point, not only technically, but also in terms of investor psychology. Most market participants will remember this level and react again as the price returns to it. Based on all this information, it can be stated that in the current chart, the price has ended its downward movement at a certain level and made a strong upward reversal from this critical support line. This reversal clearly shows that buyers are still strong in the market and that this area is acting as a valid support. If the price returns to this level again in the future, the likelihood of another upward reaction from the same zone is quite high. This provides investors with a technically strong second chance. However, as long as there are no closing candles below this level, the overall market structure remains positive. An analysis of the current technical structure of the market shows that the RSI indicator is moving in a noticeably upward trend line. This bullish trend provides important clues not only about momentum, but also about the emotional behavior of market participants. RSI is widely used in technical analysis to measure the momentum behind price movements, and such bullish structures in particular indicate growing investor confidence, continued buying pressure on the market, and positive expectations of trend sustainability. This rising trend line is a strong support zone that can be clearly observed on the RSI chart and has been tested many times over time. Each time the RSI has retraced, it has touched this trend line and then moved back upwards, creating a reassuring outlook on market momentum. This behavior feeds the perception among investors that momentum continues and provides an important structure for technical analysis. In the current situation, the RSI value seems to have approached or touched this rising support line, and the reaction it will receive from here will be quite decisive. RSI trend should not be broken. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.